Okay, now we'll start with the mass allocation functionality. So first we need to, before we proceed with the mass allocation, we need to understand what is mass allocation, what is the significance of mass allocation, and why we need to go for the mass allocation. So take an example, as a Reliance company. Okay, so in Reliance company, you are paying a rent of a particular building for say 50,000 rupees. Okay, and for that particular building is shared by say three different departments. Say department 110, which is say finance department, and say 120 department, which is say example say sales department, and department 130, which is department 130, which is say something else, say purchases department something. Okay, the rent of that 50,000 rupees is the rent of rupees 50,000 is paid by say corporate department. Say corporate department is say 100. So corporate department. So in any organization, whenever you do any expenses, I mean, for every cost center, there's a one particular person who is actually responsible to maintain the cost to maintain the cost under his cost center. So he will be responsible for the cost as well as the revenue which is generated under his cost center. So in this example, corporate department paid a rent of say 50,000 rupees, but that 50,000 rupees of rent which is paid for the particular building is used by finance department, sales department, and purchase department. Let us assume that finance department uses say 45% of the space of that particular building. Sales department uses say 25%, and the say purchase department uses remaining, what is that, 67, say 30%. So that means now corporate department needs to allocate cross charge is 50,000 rupees to finance department, sales department, and purchase department for 45%, 25%, and 30%. So 45% of 50,000 is 22,500. Similarly, for sales department, it needs to charge 50,000, 12,500. For purchases department, it needs to charge. Okay. So now the corporate department has incurred a cost of 50,000 rupees, but it needs to transfer that cost to finance department to the extent of 22,500 rupees, sales department 12,500 rupees, and purchases department 15,000 rupees. Okay, so that's where we actually use a functionality of the mass allocation. So instead of passing a manual journal entry to move the cost from corporate department to any of these three departments, we use a functionality called mass allocation. And mass allocation functionality, in the mass allocation, you write a formula, and the formula will take care of passing a journal entry. So ultimately, our objective is to, so take an example, rent. I mean, rent is an expense account. So our objective is to move that particular rent amount of 50,000 from corporate department to these three departments. So our objective of the final journal entry would be against the rent. So it will be something like 01 hyphen department 110 hyphen rent account, some rent account, and other things 0000. You want to debit this with 22,500. Similarly, for 120 department, you want to debit the rent account for 12,500. Similarly, for 130 department, you want to debit how much, 15,000, and you want to credit 50,000 out of corporate department, which is 100. Okay, so this is the objective. You want to move that rent out of 100 department to 110 department, 120 department, and 130 department based on some percentages. So you need to define percentages, and you need to write a formula, and then system understands that system is going to check what exactly is the balance under my corporate department, 50,000, based on these percentages. Okay, it is going to use the mass allocations formula batch and then generate this accounting entry. So ultimately, this is the objective of mass allocation. So any questions here in understanding the concept? Okay, I assume no questions.
Yeah.
So that means now we'll proceed with the creation of the mass allocation formula. Okay, so in the mass allocation formula, we need to specify what is my source account, where you want to take the cost out, and what are my target accounts, okay, where you want to push the cost. So go to journal, define allocation, mass allocation. So give any name for this mass allocation. So Reliance rent allocation, that's the name which I want to give. Okay, click on formulas. And what is the journal entry name? What is the journal which you want? What is the name of the journal when system is creating this journal entry? When system is creating the journal entry, so what is the name which you want for that particular journal entry? So you can say rent allocation journal. And what is the journal category for that journal? Use the category as allocation. Okay. And what is the currency? INR. Okay. And here you can see a formula of A into B by C. So A is the target account wherein you want to move the balance from the target account. Okay. So what is the target? Source account. What is the source account where you want to move the balance? The source account is the from the corporate department you want to move the balance. So under A, you should enter the source account. Okay. What is the source account? So in this example, okay, I think okay, I think I need to rephrase my based on my setup. I think I need to rephrase my departments here. So source department is 210. Okay, so I want to move the balance from source department of 210 to 110, 120, and 130. Okay, and this 110, 120, and 130, these three are grouped under a parent of 100. Okay, so this is also one of the scenario wherein we are using the parent child functionality, and here we are using a parent child functionality for the department segment. So somewhere in the screen, like in the segment value screen, I already set that for my 100 parent, these three are my childs. Okay, so that I can use this particular 100 parent in my formula. Okay, so going back to my BR100, I want to specify the source account code combination where there is a balance. So there is a balance under company 01, department 210, and account is, what is my rent account? 7420. Okay, so for the time being, just check like what I'm using under type. So I'm using something called constant. So there are three values here: constant, looping, and summing. Okay, so for as far as the source is concerned, always use constant, and then I'll explain you the significance of the looping and summing when I get into this B and C. Okay, and what is my ledger currency? INR. And I want to pick up the PTD balance. That's it. Okay, that's for the source account. And as far as the B and C is concerned, put your cursor here. Company again 01, constant. And as far as the department is concerned, I want to use a department of 100. That is the, I want to use the parent department. Okay, there is something called looping and then something called summing. Okay, so what is that looping and summing? So I want to loop all the departments under department 100, that is 110, 120, and 130. So the formula is something like, if you ask me in a layman terms, the formula, what is the formula here? 50,000 multiplied by 45 into 100 percentage. 50,000 multiplied by 25 into 100 percentage. So 50,000 multiplied by 30 divided by 100. Okay, so when you say 50,000 multiplied by 45, 25, and 30, this 45, 25, and 30 are the percentages associated for these three companies. 110, 120 and 130. There is other screen wherein you actually specify these percentages. I'll come to that a bit later. Okay. And for these three companies, these are the percentages, and these three companies are falling under parent of 100. So use the parent of 100, and here use the type of looping. I want to loop, like as you are all, most of you are technical consultants, you understand the loop, right? So when you go for looping, first it goes for it first is going to go and check what is my first department, 110. Then it goes into the loop and goes to the second department and goes into the loop, check the third department. That is called looping. Okay. And what is the account? You can use the same 7420 rent account, and you use constant. Okay. And ledger currency is INR. And here you need to use something called stat. I'll explain you what is stat. Okay. And then please specify an action for each segment. And then for C, company is again 01, constant, department is 100, and you need to use type as S. S stands for summing. So why should we use summing here? Explain you. Why we are using summing? The reason being, if you go back to your calculations, what we are saying, 50,000 multiplied by 45 divided by 100. How you are arriving at 100? It is sum of all the percentages of all the three departments. Similarly, 50,000 multiplied by 25 divided by 100. 50,000 multiply 30 divided by 100. So 100 is the sum of all the three departments percentage. So that is the reason why you need to use, in the denominator you need to use summing. Ledger currency is INR. Even here you need to use statistical. Okay. And the last one is the target. Okay. So this is the source. This is the percentages from which you want to derive your percentage, that is 45, 25 or 35. And then what is the target account where you want to move the balance. The target account is based. Target is basically you want to move the balance to all the departments under 100. So again here specify the department as 100. Okay. Okay. And again specify the type as looping, because you want to move that to all the three departments under parent 100. So you want to move to all the three departments. So you can specify only one account. So that's the reason why you need to specify that particular parent account here, and all other values being constant. Okay. Okay. And the last one is the offset account. So what is offset account? In general, we use the offset account as the same as the target account. That is where you want to balance, where you want the offset account as the same as the source account. So offset account will be same as the source account. So what is the source account? Sorry, this is the source account. So use the same as the offset account. So it will be 01. Sorry, department is 210. Account is 7420. Constant, 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 constant. Click on OK.
Arvind, one question, Arvind.
Mm-hmm.
If the total summing is not making to 100, can we use that into the offset account?
Yes, that is the significance of the offset account. But in general, you should not actually come to such kind of a what do you call scenarios, because you want to allocate it properly to proper departments. But if you're right, like if the sum of these percentages is not coming to say 100%, if it is only 99%, example, then that 1% can be moved to into this offset account.
Okay. The source account will be where that, right?
Yeah.
That percent.
Yeah. Okay. Now save this. So we have done with the creation of the template. Okay. Now what we need to do is we need to create the percentages. that is 45%, 25%, and 30%. Okay, so for the creating of the percentages, we can use a currency called, when you are creating you need to again create those percentages in a journal. So when you're creating a journal, you need to use a currency called stat. Stat stands for statistical. So the significance of the statistical currencies are like the transactions or the journals, whatever is entered using a stat currency, they will not be forming, I mean, they will not be part of your financial reporting. So stat currency journals are used only for a kind of a calculation somewhere in your calculation, whether it's a recurring journals or your mass allocations or budgets or somewhere, you can use those stat journals. So that is the reason if you see for B and C here, we have used entered currency of stat. So that means now you need to create a journals with an entered currency of stat where you can use the, where you can mention the percentages. Okay, now I will show you that, like this is the creation of the mass allocation. Okay, close this. Okay, when you are closing, it is throwing a message that you have made some changes to this mass allocation. Do you want to validate? Before you even use this particular mass allocation functionality, you need to actually validate this. You need to click on this validate all button, or without clicking on the validate button, if you try to close the form, it will throw this message. Do you want to validate? Yes. Only if it is validated, then only you will be able to use this mass allocation batch. Okay, now it is running in the it is validating the mass allocation batch in the background. While it is running, you can create the statistical journals. So this is where in the currency you can use stat. Okay, and we want to do it for say September. So we want to specify these percentages. Okay, under 01 company, 110 finance department, 45%. So put your cursor here. 01, 110, and 7420. Percentage is 45, so 0.45. And then again 01, 120 department for 7420 rent. What is the percentage? It's 25. 25. Similarly 01, 130, 7420, 0.35. Sorry, it's 0.3. 0.3. Okay, save this, post the statistical journal. So mass allocation batch is validated, and now the stat journal is now getting posted. And once it is posted,
Hey, Alvin, quick thing. This journal, stat journal, there is no debits versus credits equal, right?
exactly, it is only for a calculation purpose. So in simple terms, it's not even required to even post a journal. You need to just enter the journal, but I never tried testing that. But the document says that you can just create a stat journal. It's not mandatory that you need to post that. And debits and credits need not be, I mean, equal. Like, I mean, it's not even getting into those things, debits and credits being equal. Okay, it's posted. So again, whether it's a stat journal or normal journal, as we are actually copying the data from primary to secondary, so here you can see two posting programs got triggered. Even the stat journal is also copied to the secondary ledger.
So you mean to say for whenever the journal is created under stat currency, the debits versus credits comparison will be skipped by the system when you are posting it.
Exactly, yes. So if you have entered that particular journal with a currency of say INR or USD, and when you try to save, then it would have thrown an error message saying that your debits and credits are not equal. And when you post, the posting program will go into an error saying that the debits and credits are not equal, or the journal is unbalanced. But now in this case, posting program is successful. Even though we have entered only debits, we did not enter any credits. Okay. Okay, so we have entered the stat journals wherein we have specified the percentages, and we have created the mass allocation formula. Okay, now we are ready to generate the mass allocation batch, or wherein system will move the balance from my 210 department to 110, 120, and 130 based on these percentages. Okay, but before I do that, I need to ensure that there should be some balance under this particular rent account. Let us check if there is a balance. If there is no balance, then we'll try to create a journal and push and create some balance under this particular code combination. Okay.
And one thing I might have missed out, Arvind, what is the linkage to this stat journal with the allocation batch you created?
I'll explain you. Okay. First, let me check this. If there is a balance under 210 department. Okay, there is no balance, so I need to create some balance under that. So okay, the link is, go to the mass allocation definition. So what is the name which we are given? I think Reliance something. Click on formulas. So here you can see you have used the parent of 100 for account 7420 and entered currency stat and PTD. So now when I generate this relocation mass allocation batch using this particular formula, it is going to check under my September period with an entered currency of stat. Okay, what exactly are the percentages for the childs of this particular parent under 7420.
Okay. Okay. So it is basically looking into the currency for that particular period and the combinations of this account you set at the allocation level.
Exactly, yeah.
And Arvind, what if there are two journals?
What if there are two journals in the sense?
I mean, two journals with the same account, same currency, and same currency type.
So you
Stat.
want to
Two
for stat.
journals. Yeah.
So generally, for stat, if there are say two journals for the same account code combination, then it is going to actually sum up those things. So ideally, so it should be something like what you are trying to say is there is one particular journal with these percentages, okay, and there is another journal in the same period with the same currency with these percentages. Say take an example, maybe say 30%, 20%, 50%. Okay, if
Yeah.
that is the case, what will happen is it is going to sum up all these things. So for finance department, your share should be something like 50,000 multiplied by 45 plus 30 is 75 divided by 200. Similarly, 50,000 multiplied by 20 plus 25, 45 divided by 200, and 50,000 multiplied by 50 plus 20, 80% divided by 200. So at the end of the day, again it is same 50,000.
Okay, but in case if I have see in the above, just okay, it is with the parent, right? Okay, got it.
Okay, so even if you got one more journal also, again it's the same thing. See, when it is doing a percentage calculation, it is taking into consideration all the sums. So it will be here divided by 100. Here it will be divided by 200 because you are considering this and this. Okay.
Yeah, got it. Thanks.
Okay, so now I need to, okay, now just let me get rid of this. Okay, now I need to ensure that there is some balance under 50,000 so that can be pushed to these three departments. So when I do an accounting query, there is no balance. So try to create a journal which will create some balance under this 50,000. Then only run the mass allocation so that you will be able to see the impact of moving the balance from 210 to the other departments. Okay, now I want to create a balance under 210 department. So I want to create a journal. So generally, this is the journal entry which will be passed when 210 department is paying 50,000 rent to the vendor. I mean, ideally, this should actually come from the subledgers, but I'm just directly passing that particular entry in GL. Okay, so you can use any account as the credit, but from a normal business process perspective, whenever your expense is incurred, your expense account will be debited and cash will be credited. But from our now from our mass allocation perspective, what we are interested is in this account code combination. The under department 210 for rent account of 7420, what is my balance? Okay, I have entered the journal, post the journal.
Just a quick question, Arvind. You were saying that this kind of a journal will be typically flown through subledger, right?
Mm-hmm.
But there could be a scenario, or do we have any scenario in an implementation perspective where you're migrating the data from the other system to Oracle, right?
Uh-huh.
Did we have any requirements, or is it possible to have such kind of a requirement to have a stat journals to be created into the system? It could
Uh,
be conversion or it could be integration.
yeah, that is also possible. So take an example. You are using some other legacy system. In even in the legacy system also, it's the same stat journal functionality is available. So when you are doing a data conversion, when you are bringing over a trial balance for the functional currency, you can also do a data conversion of bringing over even the stat journals also.
But in terms of okay, in terms of that is it, that is regards to the conversion, right? But in terms of integration, where it is a daily activity,
Uh-huh.
how is impact in terms of this formulas and the percentage allocations? Because there could be chances of new accounts can be added on under particular parent account incrementally, and do we see any impact over that if you define a standalone mass allocation template?
So your question is, can we import even the stat journals instead of manually entering in Oracle? Is that your question?
Yeah, and added to that, can it be used on daily basis if there is any incremental changes happening in the parent account combinations point of view?
Yeah.
Like here in the example we took is 100. So and in the 100 we are assuming it is only 3 accounts at this moment. So
Yeah.
maybe tomorrow if further accounts are getting
Yeah.
included into this parent account 100.
Yeah, so to answer your first question, yes, instead of manually entering the stat journals, you can bring over the stat journals from the legacy system via an import. Okay, that's the one thing. And second thing is, so your question is like for a department as of now, for department 100, there is only 110, 120, and 130. But in future, there could be 140 department can also be added. Okay, and then you want your mass allocation because in the formula you're just using the parent. Okay, and in the formula it is you're just using the parent 100. So when you're doing a calculation, it is expecting the percentages for 110, 120, 130, and 140. Yes, so in those cases, don't touch formulas is already taken care. In the formulas you are using a parent. And as far as the stat journals are concerned, in the next month, if let us assume there are 4 departments, then enter the stat journal for 110, 120, 130, and 140 with appropriate percentage in the next month. Because if you observe in the mass allocation formula for stat journals, I'm using a PTD balance. So in the September there could be only 3 departments. In October it could be say 4 departments, which is fine. So it all depends on the stat journal, whatever you have created. Based on that, system is going to calculate this journal. So in the next month, this journal could be something like
Yeah, this one I got it, but I want to know how to automate this one because I don't want the user to get keying in that journal, the stat journal.
okay. As far as the stat journal is concerned, again it's a journal which either you need to manually enter or it needs to be imported from some legacy system. But whatever I have seen in my current client is generally see adding up the department doesn't happen on a daily basis, not even on a monthly basis. It's in once in a blue moon or once in a 6 months, something like that. So when that happens, okay, they will appropriately pass the stat journals accordingly. So in our current client, what we are doing is the stat journals are entered on a monthly basis using a web ADI. So it's the same web ADI every month. They just upload that. So you open the web ADI template, the journal is already available. You just click on upload button. That's it. It's a simple. And in future, if there are any new department, then only they'll update the web ADI journal and then click on upload button. That is one option. Other option would be in the formula always use instead of PTD always use YTD. Okay, and then upload this particular journal only once in a year, as long as there are no changes to department, and that's it. So once in a year you need to upload that particular journal, and that's it. System will take care of checking up what exactly is the YTD percentage balance available under those departments. Does it make sense?
Yeah, yeah.
Okay. Okay, so I have created the stat journal. I have created some balance under this particular corporate department 210 so that I can run the mass allocation to push this particular data to these departments. Okay, now those two things are done. Now I will go to the mass allocations, bring up my mass allocation. What is my mass allocation? I think this is the one. Okay, it is in validated status. Now click on generate. Would you like to schedule the generations? Click on submit. Okay, and what is the balancing segment value of the company code for which we are running this? 01. And what is the period? September 17. Okay, click on submit. Okay, now it is running the mass allocation batch in the background, which will generate the mass allocation journal. View, request, find. So it's running run mass allocation. It's running. It's completed. Click on output. See, it has generated this mass allocation batch. Copy this batch. MEA stands for mass allocation. So that's the naming convention which system is using for the auto-generated mass allocation batches. Copy the batch name. And the source for the mass allocation, the journal source for the mass allocation batches will be mass allocation. And the category is the category which you have assigned when you are creating a mass allocation batch. When you are creating a mass allocation batch, I have assigned the journal category of allocations, and that is what it is coming up. And click on review journal. Okay, here you can see for 110 department 22,500. Okay, for 120 department 12,500, and for 130 department 15,000. Okay, and it moved out of 210 department. Okay, so once you post this particular journal entry and go to the account inquiry for this particular account code combination, you will not be able to see balance, because earlier we have created a balance of 50,000. Okay, now you are moving the particular 50,000 balance out of this account to these three accounts. Now post this journal.
Narvin, one more question. I mean, these all journals, whatever the mass allocation is just created, will have an option of import via subledgers. Basically, from if we talk about department, each department can be owned by a subledger, and those people can import those. I mean, can transfer those journals to GL at the end of month or something, right?
Mm-hmm.
So what is the percentage of usage for this mass allocation in general terms for any implementation or for a usage perspective?
Okay, I'll give you an example. So in our current client for wherein we have got operations even in India. Okay, so in India there is one particular building owned by our company. Okay, and that particular building rent is shared across 3 different departments. Okay, so the corporate department, exactly it's the same example. The corporate department is paying the rent of say 50,000, and that corporate department, the rent is actually allocated to 3 different departments. So these percentages is actually decided by the business users. Okay, out of this entire building, what percentage? I mean, they actually, when I say percentage, they actually go by the square foot. Okay, if the total square foot is say 1,000 SFT, out of 1,000 SFT, 450 square feet is used by finance department, 250 SFT is used by sales department, and 300 SFT is used by the purchases department. So based on that, we created the stat general of 45%, 25%, and 30%. And then every month we are running a mass allocation program, and mass allocation program is actually allocating this particular cost to 3 different departments. This is a simple example wherein I have taken only 3 departments, but there could be hundreds of departments wherein you want to allocate that cost to hundreds of departments. And again, rent is one example. There could be many other costs, say electricity or telecommunication, some other cost which needs to be apportioned to so many different departments. And in those cases, mass allocation is a very good functionality which will help you in doing that allocation if there are hundreds of departments. You need to create that particular template only once and run the program at the end of the month, which will take care of pulling the balance under the particular account and pushing it to the corresponding departments.
Yeah, I got this point, but the point is when you say these departments are shared that particular rent, right? So let's say 110 finance department, are they not able to raise an AP invoice since it is a rent expense and
No,
they're
no, no.
under their AP?
No. Okay, I understood your question. I'll get to a background. Say our company is a Reliance company. Okay, Reliance companies is renting this particular what do you call this building from DLF builders. Okay, internally,
Mhm.
really that say that particular building, the entire building is actually used by so many different departments. So when you are sending it to when you are sending the 50,000 rupees check to say DLF builders, do you send 20 different checks? Ideally, the check will be directly sent by the corporate office, because this is our kind of our internal adjustments are like internal things. But when you are sending it to the builder, obviously you will be sending only one check, and then you need to apportion that particular cost to so many different departments. It happens in every company for any kind of a expenditure which is incurred by the corporate. So even the telecommunications also, like your phone expenses, there will be only one bill which will be sent to the entire company, Reliance Communication, and they will send it to, they'll pay that particular bill to say BSNL or BSNL or whatever it is, and then they will apportion that particular cost to so many different departments.
Yeah, got it. I got that point when you're trading between DLF to your corporate department,
Uh-huh.
because they reduce the number of checks or the reduce the number of communication to the outside you
Party.
can say it as a party or whatever.
Okay.
But my point is, when it comes to internal, because when we talk about internal our departments between corporate to other sub departments,
Uh-huh.
each department has to have a track that this is my overall transactions on that particular month, and I'm pushing that transactions to my GL,
Yeah.
which is in my be corporate or some XYZ.
Mm-hmm.
So when they are pushing, they should have a transaction which could be in this case as an AP invoice, if I understand it correctly,
Uh-huh.
right?
Mm-hmm.
If the invoice is already there, why we need to do a mass allocation here? I
Okay.
mean, why mass allocation needs to
Okay.
create again another journal?
Okay, okay, good question. Remember, this mass allocation functionality is used only for shared expenses, not for all the expenses. So you are right. Like from 110 finance department can go to the AP and create an invoice, and that will be sent to GL, and that is already under the 110 finance department. You need not do anything, which is good. So remember, this mass allocation functionality is used only for those kind of expenses which are shared. So in any business organization, there will be couple of expenses which are shared, and we are using that only for those expenses. So in this example, let us assume like for some business process, 110 department is directly sending a check to the DLF, 120 is also sending a check to the DLF, and 130 is also sending a check to the DLF. So they will be raising an appropriate AP invoices in those subledgers and push it to GL. That's it. You need not do anything if that is the scenario. We are using this functionality in those companies for those kind of expenses which are shared. Got it?
Yeah, yeah, I got it. So in that scenario, if it is a shared, so the transaction is going to happen only in the GL, not in the
Exactly.
department level.
Exactly. So mass allocation, when the system is generating this journal entry, it is being directly generated in only in GL, not in the subledgers.
And how the communication to happen to these departments?
I mean, like
It's all
communication. So generally, when your finance department is running up the reports, especially from a financial perspective, they run the reports directly from a GL. When they run the reports directly from the GL, okay, they'll be able to see this particular entry. So there are a couple of ways wherein you can do a communication. One communication would be to you ensure that this particular mass allocation journal entry, when it is actually what do you call before it being posted, you can use general approval functionality, and you can you use some kind of an rules within your AME. You can integrate your application management engine, approval management engine, which is an AME module with a GL, and you can write some rules that if the journal entry has got so and so department, then it needs to be approved by so and so person. If the journal entry has got say three different departments, then the journal needs to go for an approval of all those three different departments, and only once the three different departments approve the journal, then only this journal can be posted. That is one way of looking at that. Other
Okay,
ways,
got it. Okay.
other ways, like you can do a manual communication between these three. You can send an email to, I mean, the business process would be like you send an email to these three different departments. Only once they approve that, then only the journal entry can be posted. So even the mass allocation batch actually generates that you are not supposed to post that particular journal unless until the approval mails are attached as an attachment in the journal. If you remember in one of my previous slides, I explained whenever you create a manual journal entry, you can click on attach, and then you can attach a supporting document there. So from a business process perspective, you can follow a process wherein like you can post that particular mass allocation journal only once all those three supporting email attachments are attached if you are not using the AME approval management engine. And if you do not want to go with this manual process, yes, you implement the approval rules, and only once it is approved by those three journals, those three persons, you can post this particular journal. As you know, like in the approval rules, you can set different kind of approval rules, like parallel approval rules, sequential approval rules, something like that. So if you go for a sequential approval rules, only once it is approved by all the three departments, then only a journal will be posted. Okay.
Okay. Okay.
Okay. So that's with regard to the mass allocation functionality, and I have explained everything in detail with an explanation in the document. You can go through those things. Okay.